About 6 months ago, Alphabet reported a sharp increase in operating expenses and a decline in advertising revenue. Some investors worried that ChatGPT was going to be a Google killer, and the stock had fallen to under $100 a share. That fear was put to bed last week as the company reported a 7% increase in revenue, a 15% increase in net income, and operating margins of 29%. The stock has now recovered by 1/3, giving the company a market cap of $1.67 trillion. With almost $118 billion of cash and investments and $14 billion of long-term debt, the enterprise value is roughly $1.57 trillion. That makes Alphabet one of the largest companies in the world, and it's easy to see why. The company generated $290 billion of revenue over the last 12 months, including $61 billion of net income and $71 billion of free cash flow. Earnings per share has grown 18% a year over the last 10 years. Even so, Alphabet stock is not particularly expensive. It's valued at 26 times earnings and 22 times free cash flow. Looking at the individual segments, Google search revenue increased 5% to $42.6 billion in Q2. YouTube ads increased 4.4% to $7.7 billion, and Google Cloud revenue increased 28% to $8 billion. Google Network dropped 5%, but Google Other, which includes hardware and subscriptions, rose 24% to $8.1 billion, and the company also bought back $15 billion worth of stock. Although results at Alphabet look steady, some believe it's only a matter of time before the company starts to weaken. YouTube and Google Search are becoming increasingly populated with ads, degrading the user experience, and Google CEO Sundar Pichai has been criticized for slow decision making and an aversion to risk. But look below the surface and it's clear that Alphabet is a diverse company made up of both highly profitable businesses and riskier ventures. YouTube gets more streaming hours than Netflix. Google Cloud is growing fast. 6 products have more than 1 billion users. In addition, the company has lots of high potential investments in AI, robotics and self-driving, and more. Let's assume that Alphabet can grow revenue at 10% a year for the next 10 years, then operate with a net income margin similar to what it is now, around 20%. That would put net income at $150 billion in 10 years' time. Applying a 25 times multiple gets the valuation to $3.75 trillion, and that works out to an investment return of 9.1% a year. So Alphabet looks pretty fairly valued here, but it does have the optionality from those riskier ventures like Waymo. For now, I continue to give the stock a bullish rating, but these are my personal opinions, not financial advice, and I do hold shares in Alphabet. For more detailed investing ideas, make sure to visit our website, overlookedalpha.com.